Hi, it's Thursday the 1st of March, and this is James Shug with Westpac London's end of day market wrap. Mostly positive sentiment on equity markets today, despite a bit of a wobble to the downside at the very early part of the London trading session. A bit of a hangover, I think, from the late sell-off that we saw in US markets yesterday. There may be a bit of leftover concern that Ben Bernanke didn't signal any possibility, or give any hint at least, of that he was considering further stimulus in the US. But today, those concerns were pushed to one side. We saw pretty successful bond auctions in Spain and other European countries today, which saw the full allotment issued and at lower funding costs. So that's further evidence in market's eyes that the long-term refinancing operation from the European Central Bank earlier this week might be having some success. We had some initially positive US economic data. Jobless claims, which is a measure of the extent to which workers are being laid off, fell slightly to 351,000. That's 3 weeks now that they've been hovering around the 350,000 a week level, which is the lowest we've seen for 4 years. So that's providing further confirmation that there is actually probably some genuine sustainability to the recently improved jobs numbers that we've seen coming out of the US. Later on in the session, though, there was some disappointment when the ISM factory survey for February fell from 54.1 to 52.4, wiping out most of the previous 2 months' gains. Also, there was a fall in construction spending, a slight fall against expectations of quite a decent rise, and also personal income and personal spending were both softer than expected. Personal spending only rose 0.2% in the month of January, and through the fourth quarter, it only rose, well, it was either flat, up 0.1 or up 0.2, depending on which month you look at. So we've got 4 months in a row now that we've seen this very soft personal spending pace come through. So there has been some good news on the US economy, but it's been offset to some extent by the occasional disappointing report. We had Ben Bernanke continue his testimony in Congress today. Nothing really exciting there. I mean, he included a reasonably robust defence of QE2, saying that it left the US dollar flat, contributed to another 2.5 million jobs being created, inflation is steady and equity markets are higher. I mean, what could be wrong with that? Other data today, we had a slightly higher flash estimate of European inflation in February, 2.7%. The factory PMI in the UK was a bit softer as well. We saw that, we've seen that across a range of PMIs. The European ones were softer than expected. The UK one was today, and of course the US one, the ISM today, also came in softer than anticipated. ISDA have ruled on the issue of Greek debt. There's no default yet, there's no triggering of credit default swaps at this stage, but it's an evolving issue. Once we get the full details of the private sector participation, then that question will certainly be asked again. So that's about it in terms of market and news and data today. Market numbers, okay, the FTSE closed up, well, just ahead of the close, 1.02%. The French market up 1.4%, German market up 1.25%. And at about 5:45 in the London evening, we've got the Dow in the US up about 1/3% at 12,997. It was higher earlier on, following the jobless claims numbers, but the release an hour and a half later of the ISM factory survey pulled that down a little bit. In the commodity markets, gold up 1/3%, $1,717 an ounce. We've got oil up 1.1%, $108.25 a barrel, and copper's up 1.2% today. The Aussie dollar has been hovering around 1.08 against the US dollar. Okay, that's about it for today. I'll be back again tomorrow.